The U.S. economy is sending mixed signals. Unemployment claims are up 242K versus the expected 221K. GDP is stuck at 2.3%, and durable goods orders are rising, but credit card debt is soaring. Pending home sales are up slightly, but not enough to cheer about. All this shows the economy is kind of shaky right now. Bitcoin's been struggling, mostly because of some weak economic data, like rising unemployment claims and stagnant GDP. But at the same time, spending is still up, and the housing market isn't totally dead yet. Basically, the economy looks messy, and that's what's shaping the current market sentiment. But here's the interesting part. The RSI is low. That usually means it might be oversold, so there could be a buying opportunity soon if things stabilize. Today, we've got some key economic data coming out. PCE, personal consumption expenditures, personal income, and personal spending. The Fed loves PCE because it shows how inflation affects personal spending, basically how much people are buying despite rising prices. The Fed cares more about that than just inflation numbers like CPI or PPI. Why? Because they want to know if people are still spending money, even if prices are high. To them, we're just numbers on a spreadsheet, lol. Speaking of inflation, the GDP price index is up, which means inflation is still a problem. But here's the twist. Even though inflation is high, the Fed can't go full hawkish, raising rates aggressively, because the economy is too fragile. That's actually good for Bitcoin in the long run, because it stays attractive as an inflation hedge. Oh, and China is stirring the pot too. Their offshore yuan is dropping against the dollar, and the PBOC, China's central bank, is injecting billions into the market to keep things stable. That usually gives Bitcoin a little boost during their trading hours, 11 to 15 UTC plus 6. As for today's market movement, here's the playbook at UTC plus 6. 8, 10, probably red, downward. 11 to 15, green, upward. China often surprises with injections. 16 to 18, red again. 19, 22, green, PCE data might lift the mood. 23, 8, red, end-of-month RRP, reverse repo. Spikes usually cause a dip, but it might just be a temporary wick. Now here's the thing, is volatile because its market cap is still only around 1 trillion. Big buys and sells shake things up a lot. Long story short, the market is volatile, but there's a case for staying bullish on Bitcoin. Why? Because asset managers like BlackRock and Fidelity aren't playing the short game. They're in it for the long haul. Think 10 years, not 10 minutes. They're not worried about daily price swings. They're focused on Bitcoin's role as an inflation hedge. And with inflation still a concern, demand for Bitcoin as a store of value isn't going away anytime soon. So yeah, the market's messy right now, but if you're in it for the long term, there's still reason to be optimistic. Just don't stress over every little dip or spike. Focus on the bigger picture.